In this YouTube video, we discuss the recent failure of Silicon Valley Bank, SVB, and the impact it has had on the U.S. banking industry. The SPDR S&P Regional Banking ETF, KRE, has declined over 20% in the past week on fears of contagion. However, not all banks are heavily exposed to the cryptocurrency and startup industries, and this could be an opportunity for dividend investors. We discuss 3 regional bank stocks that have declined alongside the broader financial sector, but these are well run with long-term growth potential and secure dividends. Firstly, we discuss West America Bank Corporation, WABC, a regional community bank with 79 branches in Northern and Central California. The company has annual revenues of nearly $270 million and has a long history of paying dividends and increasing its payout for 29 consecutive years. The shares currently yield 3.3%, and analysts expect that the company will earn $5.98 in 2023. Secondly, we discuss Bank OZK, a regional bank that offers services such as checking, business banking, commercial loans, and mortgages to its customers in several states. The company has increased its dividend for 27 consecutive years and has provided dividend hikes for 50 consecutive quarters, indicating its strong business model. The shares currently yield 3.6%, and the bank is well positioned in its key markets due to the opening of new branches and inorganic growth. Lastly, we discuss Bar Harbor Bankshares, BHB, a bank holding company. The company's operating subsidiary, Bar Harbor Bank and Trust, is a community bank that offers a range of deposit, loan, and related banking products, as well as brokerage and wealth management services. Operating over 50 locations across Maine, New Hampshire, and Vermont, the bank has a good track record in both earnings and dividend growth, combined with a good dividend yield, which makes the shares attractive for dividend investors. The company is well positioned and has been able to create a strong loan pipeline and grow its loan portfolio while maintaining credit quality. This is it for now. You can always subscribe to our YouTube channel Aussie's Money Matters for more finance-related content.